Joining us right now is Potomac Wealth Advisors founder and president, Mark Avallone. Mark, great to see you. Thanks so much for joining the conversation. What do you think? Are we going to see a recession this year?
Well, I don't think we're going to see a hard recession. I mean, we do this dance of soft landing, light recession. I think what we're basically hearing is this, with a strong consumer, unemployment rate below 4%, spending, you're still going to have government spending, stimulus through those infrastructure and chips bills. There's so many factors supporting this, the tech expansion that we have, the efficiencies companies are gaining, and this AI explosion creating more wealth for companies. I think all those factors support a reasonably strong economy in 24.
Yeah, it's a good point that you make on all of that, but there's a lag effect to higher interest rates, right? So the Fed raised rates 11 times, and I think the point that Jamie Dimon was making was that not only are we at this point seeing this lag effect about to take place this year, but also all that extra cash, the COVID money that was swashing around, he says it's gone this year. So consumers are going to feel much tighter than they did last year. So these are some of the issues that he's talking about.
Yes, and he's right because he has access to the consumer credit data, and subprime debt is deteriorating. You're going to see smaller and regional banks struggle with their, not only their office debt, which we're all talking about, but a lot of their consumer loans for the marginal borrowers is going to impact their earnings. Banks are really critical because they're going to extend credit, and if they're not flush and extending credit and confident in their loan book, they're going to pull back. So I do see why he's cautious, but I think that there are so many other factors that can offset this slowdown in the consumer who've spent their money.
It's about fundamentals as well, right? We've got the banks kicking off their fourth quarter earnings reporting season this week. We'll hear from JP Chase, Bank of America, Citigroup, Wells Fargo Friday morning, Mark. When I spoke with Jamie Dimon, he was very optimistic about JP Morgan's prospects. This has been the safe harbor in a storm. The bank has been JPM. Would you buy the banks going into earnings?
Well, he has reason to be optimistic. Look, the mega banks attracted capital when we had the SVB failure. That lowered their cost of capital. Their net interest margins improved. Their capital markets activity was a little more resilient than their competitors.
And there's been a deal a minute in the last couple of days.
There have. Now, haven't been the mega deals because the FTC is going to clamp down on those.
Right,
but there are a lot of deals out there. I think across the board, you got to be really careful with regionals that do have that office exposure that are fighting online bank deposit machines are crushing them and their net interest margin profitability, and that's going to start to show up. When rates were zero, online banks were not competing for deposits as effectively, but when people get 3%, 4%, and 5%, they do take their money out of banks, and that's going to hurt profitability.
Hey, great point about the FTC, because you were seeing these green shoots of capital markets activity, but the FTC is not going to allow antitrust potential issues to happen, and they're going to clamp down. You're right. Great point. Got to get your take on the Bitcoin story this morning. Okay, Bitcoin traded up yesterday because we had a Securities and Exchange Commission tweet that the Bitcoin ETF was about to get approved. It was compromised. In fact, it was a false announcement about approving the Bitcoin ETF for trading, and now we see Bitcoin trading down. The Securities and Exchange Commission said that the account was hacked. Now it's not getting approved today. It's not going to start trading tomorrow. Mark, would you buy the ETF? The Bitcoin ETF, and will it get approved?
Well, first, I wonder if the SEC is going to fine itself for what just happened, because they certainly would go after any private company.
That's right.
I think institutional investors are still going to be cautious. This is a big step in the direction of acceptability, but institutional investors have a different mandate, and I doubt they're going to just dive right in because the SEC has come around.
All right, Mark, great to get your take on all of this morning. Thank you. Mark Avallone joining us.